All right, let's talk about Ambarella. We're going to break down their third quarter earnings from back on November 25th, 2025. And more importantly, we're going to try and make sense of the absolutely wild market reaction that came right after.
So here's the big question, right? Ambarella comes out with what looks like a classic beat and raise quarter. I mean, this is the stuff investors dream of. So why on earth did the stock just completely crater, dropping almost 19%? It just doesn't add up on the surface. Let's dig in. Okay, first things first. Let's look at the good news, because believe me, the headline numbers looked strong. We're talking about results that should have sent the stock soaring, not sinking. I mean, just look at this. It's a clean sweep. They beat analyst expectations on both the top and bottom lines, earnings per share and revenue. In this game, that is textbook. That is what you want to see. It's usually a green light for a rally. And this wasn't just squeaking by either. The non-GAAP earnings per share came in at 27 cents. The analysts were expecting around 21 cents. That is a massive beat. We're talking a 29% surprise. Just crushed it. And the revenue side of the story, just as good, if not better. A record $108.5 million. That's up over 31% from the same time last year. I mean, that is some seriously impressive growth. And the cherry on top? They raised their guidance for the entire fiscal year. The CEO, Fermi Wang, basically said they're expecting a record year, projecting growth in the 36 to 38% range. So you've got a beat on earnings, a beat on revenue, and a raise on guidance. Everything looks fantastic, right?
Yeah. Well, this is where the story gets really weird. With a perfect report like that, you'd be betting on a huge rally. But the market? It had other ideas. And its verdict was absolutely brutal.
The very next day, the stock just went into a free fall. It closed strong on the 25th, up over 90 bucks a share, and then bam. The next day, it just plummeted, wiping out weeks of gains in a single session. The final damage, a drop of nearly 19%. And look, this wasn't just some small pullback. The trading volume was huge, like 2 to 3 times the normal average. That tells you there was real money, real conviction behind all that selling. So what gives? What on earth did investors see hiding in that report that made them completely ignore all the great news on the surface? We've got to read between the lines here. Let's figure this out. Okay, so this really boils down to a tale of two completely different stories. You have management painting this really rosy long-term picture. But on the other side, you have the market, Wall Street, getting spooked by what's coming up in the immediate future. It's a total disconnect. The sell-off really came down to 3 key fears. First, that Q4 guidance. Yeah, they raised the full year, but the next quarter's revenue is actually guided to be lower than the one they just had. That's a red flag. Second, gross margins are getting squeezed. They're guiding them down a bit, and the market hates to see that. And third, even with all this great revenue growth, they're still not profitable on a GAAP basis. They're still posting a loss. And those 3 things combined, that was enough to trigger the panic. But okay, let's pump the brakes on the panic for a second. Just because the market is freaking out about the short term doesn't mean the whole long-term story is broken. In fact, management has a pretty compelling bull case, and it's all built around this massive trend called Edge AI. And this isn't just talk. Look at the numbers. Their Edge AI products are now a whopping 80% of their total revenue. This is the heart of their business now, and they just posted their 6th straight quarter of record sales in this category. They are all in on this. So how are they going to keep this growth engine running? Well, management laid out 3 big drivers. 1, their tech is being used in more and more things. Security cameras, cars, you name it. 2, the demand for more powerful AI on these devices is just going up. And 3, and this is huge, they're actually able to charge more for their chips. The average selling price is up about 20%. That's a great sign. And this isn't just theory. You can see it happening in real time. Look at all these design wins just from this last quarter. We're talking big names like Motorola and security, XPeng and electric vehicles, heck, even the company that makes the high-tech litter robot for your cat. It just shows you how broad the demand is for their technology. So let's bring it all together. What do we make of all this? You've got this incredible long-term AI growth story on one hand, but on the other, you have these very real, very immediate concerns about margins and guidance that the market is obsessing over right now. All right, so for our official take, the next call, we're reading this market perform with an $80 price target. Look, the long-term AI story is powerful. We don't doubt that.
But those short-term headwinds around margins and guidance are going to put a ceiling on the stock for a while. That big 19% drop basically just priced in all this new uncertainty. Now, whenever you have such a clear tug of war between the bulls and the bears, you can bet on one thing: volatility. The stock is probably going to keep making some big swings. And that leads us to a pretty interesting, if a little wild, trade idea. The idea is called a volatility straddle. Instead of betting on whether the stock goes up or down, you're just betting that it's going to make a big move, period. You do this by buying both a call option and a put option. The market has to resolve this debate eventually. Either the bulls or the bears will win out over the next couple of quarters. Your goal is just to profit from the big price swing when it happens, whichever direction it goes.
So, at the end of the day, this is the billion-dollar question, isn't it? Is this huge sell-off just the beginning of a bigger problem, a warning that the business is under pressure? Or is this a golden opportunity to buy into a long-term AI powerhouse at a huge discount? That's what the market's going to have to figure out. This is not financial advice.